99% of people will never get rich because they don't understand the power of patience. Warren Buffett, one of the greatest investors of all time, built his fortune not with crazy strategies or shady shortcuts, but with a simple, powerful principle: waiting. But waiting for what? And why? The answer lies in the magic of compound interest. Imagine you invest $1,000 with a 10% annual return. In the first year, your money grows to $1,100. In the second year, it's not just the initial $1,000 that earns interest, but also the $100 of accumulated profit. After 30 years, without adding anything more, that amount becomes about $17,500. Now imagine the impact if you keep investing regularly. But here's the problem. Most people give up before they see the results. They invest today and want to get rich tomorrow. If the gains seem slow at first, they lose patience and look for quick alternatives, like speculation, financial scams, or impulsive spending. The result? They lose money and go back to square one. Buffett understood that patience is wealth's greatest ally. He started investing at 11, and today most of his fortune came after he turned 60. That means for decades he allowed the money to work for him. His wealth is proof that time and discipline outweigh any get-rich-quick scheme. Patience doesn't just apply to investing. In entrepreneurship, most businesses take years to establish themselves. In the job market, the highest salaries go to those who accumulate experience and build authority. The big mistake people make is wanting immediate results for efforts that require time. So, how do you apply this in practice? First, start investing as soon as possible, even if it's with a small amount of money. Second, avoid falling into the impatience trap. Trust the process. Third, reinvest the earnings and let time do the heavy lifting. If you want to build wealth, you need to learn to wait. It's not about luck. It's about understanding that time is the greatest asset you have. And now that you know this, the choice is in your hands. Are you going to keep looking for shortcuts or finally start building your fortune with intelligence and patience? Warren Buffett is one of the most successful investors of all time, but his secret isn't finding miracle stocks or having insider information. What really set him apart from most people was something anyone can apply: strategic patience. He started investing at 11, and even with decades of experience, he always says his best strategy was waiting. While many chase quick gains, trying to predict the market and making dozens of trades a year, Buffett follows a simple principle: find good investments and let them mature over time. For him, the stock market is like a chess game, where patience and well-thought-out decisions are worth much more than hasty moves. He's not looking for immediate profit, but continuous growth over the years. This mindset has made him one of the richest men in the world, accumulating a fortune that exceeds $100 billion. But here's the interesting part. Most of that wealth came after he turned 60. This happens because the true power of investments isn't just in choosing good stocks, but in allowing time and compound interest to work their magic. The longer the money stays invested, the more it grows exponentially. Buffett often says that investing is like planting a tree. You put the seed in the ground, take care of it, and wait. At first, it seems like nothing is happening, but after a few years, the results start to appear, and over time, that tree turns into something gigantic. The big mistake most people make is impatience. They want immediate results, give up halfway, or sell their investments too early. But Buffett has proven that the real secret to wealth lies in consistency, long-term thinking, and the ability to stay calm even when the market is turbulent. The question is, would you have that patience to watch your money grow? But in today's world, everyone wants everything yesterday. People enter the market wanting to get rich overnight and end up losing everything. They buy stocks impulsively, bet on cryptocurrencies without research, follow tips from supposed experts, and when they realize it, they're at a loss. The desire to get rich quickly leads many to make fatal mistakes, and the market, unforgiving, doesn't forgive those who don't understand the rules of the game. The big problem is that most people don't want to build wealth, they want to make money fast. They ignore one of the most fundamental principles of investing: time is the greatest ally of those who want to prosper. Warren Buffett has always known this. He understood that patience is not just a virtue, but a powerful tool for financial success. Buffett started early, but was never in a hurry. while many try to predict the next big boom or find shortcuts. To fortune, he followed a simple strategy: buy good companies and wait. Simple, but extremely difficult in practice, because it goes against the behavior of most. Impatience causes many to sell promising stocks on the first drop, become desperate in times of crisis, and change strategies all the time. Immediacy doesn't mix with investments. The market is cyclical, full of ups and downs, and those who are not patient end up being swallowed by volatility. Buffett knows that in the short term, emotions dominate the market, but in the long term, logic wins. He doesn't worry about daily fluctuations because he understands that true growth happens over the years. One of the biggest mistakes investors make is wanting immediate results. They look at someone who became a millionaire in a short time and think it can happen to them too. But what they don't see is that, for everyone who wins a big jackpot quickly, thousands lose everything trying to do the same. The market is not a casino, and those who treat it like a bet usually come out empty-handed. Buffett has proven that patience is one of the most valuable skills for those who want to accumulate wealth. He invests as if he were planting a tree. He puts the seed in the ground, waters it, and waits. In the beginning, it seems like nothing is happening, but over time, the results start to appear. After a few years, what seemed small becomes gigantic. The secret to financial success has never been in magical predictions or strokes of luck. It's in the discipline of investing consistently, resisting the temptations of easy money, and giving time for the effect of compound interest to work its magic. In the end, the big question is, do you have the patience to let your money grow, or will you fall into the trap of immediacy and end up like most? In the world of investing, most people are always trying to predict what's going to happen. They analyze charts, follow news, follow market gurus, and make dozens of trades trying to find the perfect time to buy and sell. But time shows repeatedly that this strategy rarely works. Warren Buffett, one of the greatest investors of all time, never wasted time trying to guess where the market would go in the short term. Instead, he followed a simple but extremely effective philosophy: time. In the market is more important than timing the market. Buffett understood early on that the key to financial success isn't about hitting the exact moment to buy and sell, but about staying invested long enough for the natural growth of assets to do their job. One of the best examples of this was his decision to buy Coca-Cola stock in 1988. At the time, many investors were more concerned with passing trends, looking for the next big hit. But Buffett saw something few did. He realized that Coca-Cola was an established brand with a global presence and a profitable business model. He bought the shares and simply waited. Today, decades later, those same shares are worth billions and continue to pay millions of dollars in dividends every year. While many entered and left the market trying to hit the best time to trade, Buffett simply remained invested, enjoying the fruits of time and the company's growth. That's the essence of the first big lesson. Trying to predict the market is a dangerous game, but maintaining solid investments long enough can generate impressive returns. Buffett's second lesson reinforces this concept by showing the true power of compound interest. He often says that compound interest is the eighth wonder of the world, and his own trajectory proves it. Most of Buffett's fortune didn't come when he was young. In fact, more than 95% of his wealth was accumulated after he turned 50. This is because he let the money grow over time, without trying to speed up the process or seek immediate gains. The effect of compound interest is like a snowball. In the beginning, it seems small and insignificant, but as the years go by, the gains begin to multiply. The secret is to have the patience to allow this exponential growth to happen. Many people give up halfway because they think the results are taking too long. They sell investments before their time, spend the money that could be earning, and end up missing the opportunity to build a real fortune. Buffett did the opposite. He trusted in time, reinvested the profits, and let the money work for him. Another fundamental lesson comes from the criteria Buffett uses to choose where to invest. Instead of following passing trends or betting on fashionable businesses, he focuses on solid companies that can generate wealth in the long term. The strategy is simple. He looks for companies that have a strong business model, an established brand, and the ability to generate profits consistently for decades. That's how he invested in Apple, American Express, and of course, Coca-Cola itself. These companies have something in common. They offer products and services that people use daily, regardless of changes in the market. While many startups and passing fads come and go, these giants continue to thrive. Buffett has always avoided getting into businesses that he didn't fully understand. This protected him from making mistakes that many investors make by following the hype of the moment. He knows that solid companies are like trees that grow over time. They may face storms, but they remain firm and bear fruit for those who have the patience to wait. And it is precisely this patience that leads to the last and perhaps most difficult lesson of all. Patience eliminates impulsive mistakes. The financial market is full of ups and downs. Often people panic when prices fall and sell their investments at the worst possible time. Others get excited about market euphoria and buy overvalued assets, only to see their prices plummet soon after. Buffett has a different view. He believes that the market is a mechanism for transferring money from the impatient to the patient. This means that those who make impulsive decisions usually end up losing money to those who remain calm and follow their strategy with discipline. While many sell their shares in times of crisis, Buffett does the opposite. He buys when everyone is selling, taking advantage of opportunities that arise precisely because most people don't have the patience to wait for the recovery. This approach has allowed him to accumulate fortunes while others suffered losses. He understands that the market will always have moments of uncertainty, but that in the long run, the fundamentals of good companies prevail. The big issue is that most people don't have the patience to watch their money grow. They want immediate results, give up halfway, or make hasty decisions based on fear or greed. But Buffett has proven that the real secret to wealth lies in discipline, long-term thinking, and the ability to stay calm even when everything seems uncertain. Time in the market is more important than timing the market. Compound interest only works for those who wait. Solid companies generate wealth in the long term, and patience is the greatest ally of those who want to win in the world of investing. Warren Buffett built his fortune following a simple but extremely effective investment philosophy. While most people seek quick gains and try to predict the market, he focuses on the long term, ignoring momentary fluctuations and trusting in the power of time. But how exactly does this strategy work? Why is it so efficient? And what's the real reason behind this approach? The first answer lies in how this philosophy is applied. Buffett doesn't invest thinking about immediate profits. He chooses solid companies with good fundamentals and maintains his investments for decades. Instead of selling at the first profit opportunity, he continues to reinvest dividends, allowing his wealth to grow like a snowball. This strategy requires discipline, as the investor needs to resist the temptation to react to every market fluctuation. Many sell when prices fall for fear of losing money, while others buy impulsively during highs, believing that prices will continue to rise. Buffett does the opposite. He invests rationally, without hurry or despair, always thinking about the future. But why does this strategy work so well? The answer lies in market behavior. In the short term, the market can be extremely volatile, reacting to news, crises, and speculation. However, in the long term, it rewards those who maintain a strategic vision and ignore momentary noise. Well-managed companies that offer essential products and services continue to grow regardless of temporary fluctuations. Buffett understood that by focusing on the long term, he could benefit from this constant growth without worrying about passing uncertainties. The real reason behind this philosophy is the power of compound interest and the appreciation of good assets over time. When an investor reinvests their dividends and holds their stocks for decades, they allow their money to multiply exponentially. In the beginning, the gains may seem small, but as the years go by, the growth becomes accelerated, creating an accumulation effect that many people underestimate. Buffett didn't become a billionaire because he found a miracle investment. He became a billionaire because he knew how to wait, allowing his capital to grow uninterrupted. The reality is that most people fail at investing because they lack patience. They want immediate returns, constantly change strategies, and react impulsively to market fluctuations. But Buffett has proven that patience and consistency are the real keys to financial success. The question that remains is simple. Are you willing to follow this path? resisting short-term temptations and letting your money grow over time? Or will you continue trying to guess the future like so many others who end up failing? If you truly want to build wealth, you need to stop looking for shortcuts and start seeing patience as your greatest ally. The financial market has always been and always will be a long-term game. Those who try to get rich overnight end up frustrated, while those who understand the importance of time and discipline reap the best results. Warren Buffett didn't become a billionaire because he found a hidden secret or because he was lucky. He became a billionaire because he followed simple principles with absolute consistency. He invested in solid companies, reinvested his dividends, and let the power of compound interest work in his favor. While most people despair during downturns and try to predict the market, he simply waits. The reality is that patience is the most underestimated quality when it comes to building wealth. Most people want quick results and become obsessed with miraculous strategies that promise immediate returns. They look for the next big investment, follow fleeting trends, and get carried away by market emotions. But the problem is that this mentality leads to frustration and, often, irreparable financial losses. Buffett has always repeated that the biggest mistake investors make is acting on impulse. Fear and greed are the worst enemies of those who want to prosper financially. When the market is up, many buy stocks without properly evaluating the real value of the companies. They buy because everyone else is buying, because they feel like they're missing a unique opportunity. But what happens when the market changes? Direction? Panic sets in, the declines begin, and, in desperation, many sell at the worst possible time. This is the trap that leads most people to lose money. They buy high, sell low, and then say that investing is too risky. But the truth is that the problem isn't the market, but the lack of patience and discipline. Buffett followed a different path. He learned to ignore emotions, not to worry about daily market fluctuations, and to focus on what really matters: long-term growth. He knew that solid companies go through periods of instability, but that over the years their value tends to increase. One of the greatest examples of this was when he bought Coca-Cola stock in 1988. At the time, the company was already a giant, but many people believed that the soft drink market was saturated and that there was no more room for growth. Buffett, however, saw beyond the current moment. He understood that Coca-Cola was a brand with a global presence, an iconic product, and a business model that could continue to generate profits for decades. He bought the shares and maintained his position without worrying about short-term fluctuations. Decades later, these shares have multiplied in value and now pay millions of dollars in dividends every year. If he had followed the behavior of the majority, selling at the first turbulence or trying to guess the best time to exit the investment, he would have missed this incredible appreciation. This is the great secret of patience in investing. Time transforms ordinary investments into extraordinary fortunes. The effect of compound interest only works for those who wait. The longer the money remains invested, the greater the exponential growth. Buffett accumulated more than 95% of his fortune after the age of 50 because he knew how to wait. Many people look at billionaires and think they got their wealth quickly, but they don't realize the process behind it. They underestimate the power of the long term. They want immediate wealth and end up sabotaging themselves by changing strategies all the time, jumping from investment to investment without allowing time to work its magic. Patience also helps to avoid the most common mistakes in the market. Those who have the discipline to maintain their investments for long periods do not fall into the temptation to sell in panic or buy in euphoria. Buffett has always said that the market is a mechanism for transferring money from the impatient to the patient. This means that those who get carried away by emotions end up handing over their money to those who follow consistent strategies. And this logic applies not only to the stock market, but to any form of wealth building. Whether investing in real estate, creating a business, or building a career, success always depends on time, consistency, and patience. Those who persevere, who continue to improve their skills and make smart decisions over the years, are the ones who truly prosper. However, patience doesn't simply mean waiting without doing anything. Buffett doesn't invest and forget. He monitors his companies, constantly evaluates his investments, and adjusts his strategy when necessary. But he never makes impulsive decisions. He understands that the true value of an investment is revealed over the years, not in a few months. If you truly want to achieve financial independence, you need to adopt this mindset. You need to stop looking for shortcuts and understand that time is your greatest ally. Immediacy destroys more financial dreams than anything else. The big question that remains is, do you have the patience to get rich? Are you willing to follow the long-term path and reap the rewards of this strategy? Or will you continue trying to predict the market, jumping from one investment to another, chasing promises of quick gains that almost never materialize? If this philosophy makes sense to you, share your opinion. Do you think you have the patience needed to build wealth? Comment below and let's talk about it.